if you don't anticipate, then you have no business predicting. That's what predicting and anticipate got to go hand in hand, right? And if you don't understand and know you're in the predictive business as a trader or investor, then get out of the business, because that's the business you're in, the predictive business. Over here on this chart, you could see a series of swing highs that continue to come up. Price comes up to price and rotates back down. Little Johnny, the 5th grade, 6th grader know-it-all, will say, look, awesome resistance. Little Johnny didn't sell it there. He didn't get short there, but he wants to get short here because he's seen how great it works. The more it works, the less likely it's going to work. Well, Johnny doesn't know that, and most of the people who trade are little Johnnies. And so, number one, you make sure you can anticipate that shorts, there's always longs and always shorts in the market. Shorts are going to put buy stops, which is the order type people use to get out of a short position, generally for a loser. Instinctively, they're going to put it above certain prices. That doesn't mean it's a right or wrong thing to do. It's just instinctively the thing to do. So you generally, when you get in, if there's enough of them, it's the impetus of a breakout. So that's the first kind of progression and story building that you do. Then you come under a microscope and say, well, I'd like there to be more shorts in the market at the moment I get long than longs. I don't want the competition. I actually want shorts. We're going to look around and say, uh-oh. And you get that with our red laser. And then our AP, adder, puller, through the MBO data, we want a top negative number. I like to see it when it goes sell balance to buy balance as an inflection point and the win moment. And so let's speed it up. Right before this big pop, we want to be long before the big pop. What do we see? We see a little sell balance, and we'll see a little sell balance. We want the top number to be lower or less than the bottom number. And we see it flip. It goes nice sell balance, nice sell balance, nice sell balance. Okay, nice sell balance. Oh, a little flip. You're never going to see that or catch that unless you're anticipating that. And for people that say, oh, it's too fast, it might be too fast, go become a carpenter or a plumber or something. It's not too fast if you get yourself up to speed and slow it down. You know what I mean? This is like, you could be a great pitcher, but I don't like all the pressure of people watching me. Well, then you're never going to be a great pitcher. And everybody wants to avoid reading the real time. And one reason is because it's impossible with the wrong tools. You go down all these rabbit holes, stuff that's hindsight. And you got to put yourself in a position to understand why price moves, and then put yourself in a position to see when other people are stuck the wrong way. And when you get offers above the market saying, nah, I don't want to sell it here, I'll be willing to sell it higher. That's when you get this minus number. And then when it rallies up and this number rebalances, is generally the temporary top. I'll play it. Watch it. Stays minus on top. As soon as it gets to balance, boom, what happens? It went buy balance, sell, and then it goes down. And goes down quite a bit before it rallies. So it's showing you the rotation. Qualification, understanding order flow, finally the proper way.